1. Taxation. Self-employed, sole trader. Income tax. As a sole trader, you are taxed on your business profits as personal income. The tax rates are progressive, based on the UK's income tax bands. 0% on profits up to the personal allowance, £12,570 for 2023-24. 20% on profits between £12,571 and £50,270. 40% on profits between £50,271 and £125,140. 45% on profits above £125,140. National Insurance, NI. Class 2 NI, a flat rate of £3.45 per week is payable if your profits exceed £12,570. Class for NI, 9% on profits between £12,570 and £50,270, and 2% on profits over £50,270. Tax simplicity, there is no corporation tax. Your tax is based on total profits, and you submit a single annual self-assessment tax return. Limited company. Corporation tax. The company pays corporation tax on its profits, which is currently 19%, rising to 25% for companies with profits over £250,000 from April 2023. Profits below £50,000 will continue to be taxed at 19%, creating a marginal relief system for those in between. Personal income tax. As the owner of a limited company, you are typically paid via a salary, subject to pay and national insurance, and dividends, subject to dividend tax. Dividend tax rates. 0% for dividends up to the £1,000 tax-free dividend allowance. 8.75% basic rate on dividends up to £50,270. 33.75% higher rate on dividends above £50,270. 39.35% additional rate on dividends above £125,140. Tax efficiency. The limited company structure can be more tax efficient for higher earnings due to the lower tax rates on dividends compared to income tax. Many business owners also take a low salary, below the NI threshold, and top it up with dividends, which reduces their overall tax burden. 2. Legal liability. Self-employed, sole trader. Unlimited liability. You are personally responsible for all business debts and obligations. This means that if your business incurs debt or legal action, your personal assets, e.g., your home, car, savings, could be at risk. Limited company. Limited liability. A limited company is a separate legal entity. Your liability is limited to the amount you have invested in the company, e.g., the value of your shares. This offers greater protection for your personal assets if the business runs into financial trouble or is sued. 3. Ownership and control. Self-employed, sole trader. Complete control. As a sole trader, you are the sole owner and decision maker. You have full control over business decisions, operations, and profits. No separation of business and personal identity. Legally, there is no distinction between you and your business. This can make it more difficult to sell the business or separate your personal finances from the business. Limited company. Separate legal entity. A limited company has its own legal identity, distinct from its owners, shareholders, and managers, directors. Even if you are the sole shareholder and director, the company exists independently of you. Ownership versus management. If the company has multiple shareholders or directors, you may not have complete control over decision-making. Shareholders own the company, and directors manage it, which can lead to differences in governance. 4. Administrative responsibilities. Self-employed, sole trader. Simplified accounting. You must keep accurate records of your business income and expenses and submit an annual self-assessment tax return to HMRC. No formal accounting requirements. You are not required to file accounts with Companies House or submit other formal reports. VAT registration. If applicable, you may need to register for VAT if your turnover exceeds the VAT threshold, £85,000 as of 2023-24. You'll need to submit VAT returns quarterly if registered. Limited company. More complex accounting. Running a limited company requires submitting annual accounts to Companies House and filing a corporation tax return, CT 600, with HMRC. Confirmation statement. You must submit an annual confirmation statement to Companies House, confirming key details about your company, directors, shareholders, etc. Pay. If you pay yourself a salary or hire employees, you'll need to run a payroll scheme and submit regular reports to HMRC. VAT registration. If applicable, if your company's turnover exceeds £85,000, you will need to register for VAT and file quarterly VAT returns. Accountant costs. Due to the complexity, many company directors hire accountants to help manage these administrative tasks, which adds additional costs. 5. Credibility and perception. Self-employed, sole trader. Perception. Sole traders are often seen as small, one-person operations, which can be perfectly fine for certain businesses, especially those that focus on local or personal services. However, in some sectors, operating as a sole trader might lack the professional image or credibility that larger clients or businesses expect. Limited company. Professionalism. A limited company often carries a more professional image, and it may be easier to attract larger clients or win contracts. Some companies and government bodies only work with contractors through limited companies for liability and tax reasons. B2B contracts. Some clients may require their contractors to operate as a limited company due to IR35 regulations or for contractual obligations, especially in industries like construction, IT, or consulting. 6. Financial flexibility and profit retention. Self-employed, sole trader. All profits belong to you. You are entitled to all profits from the business, but these are subject to personal income tax and national insurance contributions. No ability to defer tax. You can't leave profits in the business to defer tax, as everything is taxed as personal income in the year it's earned. Limited company. Profit retention. A limited company can retain profits within the business. You are taxed on salary and dividends, but you can choose to leave profits in the company for future use, such as reinvestment or paying dividends in a more tax-efficient year. Tax planning. By managing how much salary and dividends you take, you can better control how and when you are taxed. 7. Pension contributions. Self-employed, sole trader. You are responsible for arranging your own pension. You can contribute to a private pension scheme, but there are no employer contributions. Personal contributions are capped at the annual allowance, currently £60,000 or 100% of your income, whichever is lower, with tax relief on contributions up to this limit. Limited company. Your company can contribute to your pension as an employer, and these contributions are an allowable business expense, reducing your corporation tax. This can be a very tax-efficient way to save for retirement. Employer pension contributions don't count towards your personal annual allowance, making this option more flexible for building your pension pot. 8. Expenses and benefits. Self-employed, sole trader. You can claim certain business expenses to reduce your taxable profit, including costs like office supplies, travel, and equipment. However, the range of allowable expenses is generally more limited compared to a limited company. Limited company. A limited company can claim a broader range of business expenses, including costs for things like office equipment, professional services, and even certain benefits for directors, e.g., private health insurance, company cars, and travel expenses. Director benefits. You can also provide tax-efficient perks, such as paying for health insurance or providing a company car. 9. IR35 legislation. If you're working as a contractor, especially through a limited company, IR35 legislation could apply. IR35 is designed to prevent contractors from paying less tax by working as limited companies while essentially performing the same role as employees. If your work falls inside IR35, HMRC considers you an employee for tax purposes, meaning your income is taxed as though you were an employee, subject to pay and national insurance. 10. Selling the business. Self-employed, sole trader. The business is often tied to your personal identity, making it more difficult to sell. However, you can sell assets or goodwill. Limited company. A company is a separate legal entity which can make it easier to sell the entire business, including assets, customer contracts, and intellectual property, as a package. You may also benefit from Entrepreneur's Relief, now called Business Asset Disposal Relief, which allows you to pay a reduced rate of capital gains tax when you sell shares in your company. Conclusion. Self-employed, sole trader best for those who want simplicity, fewer administrative tasks, and are comfortable with personal liability. It's a good option for smaller businesses, freelancers, and tradespeople with relatively straightforward financial affairs. Limited company, suited for businesses with higher turnover, a need for liability protection, or those looking for long-term growth. It provides more tax planning opportunities and professional credibility but comes with added complexity and responsibility.